As an investor, there are four important dates you must take note of when it comes to dividends. So even if you are a passive investor, that is, you just buy the stocks and you forget about them, or you are still planning to invest, then you must take note of these key important dates relating to dividends. So as you must have already learned from my page here, dividends are payments companies make to their shareholders for investing in their business. So if you are invested in a company and the company makes a profit, the board of directors of that company can decide to pay a part of that profit as dividend to you and other shareholders, and then retain the rest for investment and operational purposes. And there are different stages companies go through when they pay dividends to their shareholders. And here are the four key dates that are important to this process. Number one is the declaration date. So this is the day the board of directors make a public announcement that they will be paying dividends. And on this declaration date, they are going to state the size of the dividend so that you can get a view of how much you'll be getting per share and how much you'll be getting in total. And also the ex-dividend date, which I'll explain soon. So this declaration date is more like an announcement date. But then the information provided on this declaration date can be of great benefit to you, because with that information, you can decide either to sell your shares if you're not interested, hold, or even buy more shares before the coming date. So the next date, which is very important, is the ex-dividend date. So this is the date that determines whether you'll be entitled to the dividend or not. If you sell your shares, even if it's 1 minute before the ex-dividend date, you will not be entitled to dividend. You won't get anything. And if you buy these shares on the ex-dividend date, you still will not be entitled to the declared dividends. So for you to be entitled to the declared dividends, you have to hold your shares at least 1 full day before the ex-dividend date. If not, you are getting nothing. The next stage is the record date. So this can either be on the same day as the ex-dividend day or one business day after the ex-dividend date. And it is on this day that the company locks in the final list of shareholders that will be receiving dividends for that period. And it is also on this date that we usually see the share price drop and trade on the ex-dividend price. That's the reasoning behind that one, is a story for another video. But the key thing here is that if you are investing in dividend paying stocks, or you are planning to start investing in dividend paying stocks, then you have to take note of the ex-dividend date and the record dates so that you can make informed decision. Finally, we have the payment date. I don't think this one requires any much explanation because I can already see you smiling. So this is the date you receive your dividend, the date your dividend gets paid into your account. But then you have to bear in mind that a lot of countries impose some taxes on dividend payments. But then that won't stop us from investing, right? Don't forget to share this video to everyone who might find it useful. Follow for more investing tips, like and leave a comment for me below. I am Olivia, a chartered financial analyst, and on this platform, Make Finance Simple, my goal here is to make finance and investing simple and very easy for you. There are no jargons on this page. I explain everything in simple terms. I'll see you in the next video.